do have a question online from Miss Sonia on YouTube. All right. And here it is. We're putting it on the screen right now. All right. It says, so to begin, I can request the bank for a copy of my amortization schedule so I can see my monthly schedule of principal and interest. You can do that, right? And eventually they'll give it to you. You can do that. But as soon as you pay even an extra dime on that amortization schedule, that's going to take you somewhere between 2 weeks and a month to receive. As soon as you pay even an extra dime on it, it's destroyed. It's no good anymore because all the numbers change. We're going to show you our system that keeps track of all of your amortization schedule. I don't care how many mortgages you have. We can run them for you. I don't care how many debts you have. You can put all of this in, and we simultaneously keep track of all your amortization schedules inside our computer program that does everything for you and tells you exactly how much money to pay and what month to pay it in. Watch this, folks. Watch this. All right. So now this is what happens when you have a 23, 43, 54 prepaid to this loan on 6%. Now, remember, I told you that if you can afford it, your 6.25% loan is better than 2.99%. Let's go to the 2.99% and look at it. Remember, our principal payments were less than $200 on this loan. Okay. Now we're at 2.99. Our payment is $842.13. So that's less. The amount of interest that the bank wants on this is $103,000. Okay. But look at your payments now. Look at your principal payments on this loan at 2.99. If you want to make all 360 payments, then you want the lowest interest rate available. Get the lowest you can if you intend to keep that loan for 30 years. But if you want to pay it off in 7, you want an interest rate that's actually going to help you where you can control the principal payment and how much money goes to principal. So at a lower interest rate, to get rid of line 2 on this loan, you need $344.65 to get rid of line 2. Whereas on the other loan, to get rid of line 2, all you needed was $190.75 at 6%, 6.25% interest. Kenyatta, when you learned that, how did that change your life?
It changed everything for me and my clients. I was able to actually take them on the whole journey and plan further out using the P.I.L.L method. It's one of my favorite things to show my genius.
There you go. There you go. So remember that if we paid at 3.99, okay? So, I mean, at 6.25, we prepaid $2,343.54. Okay. And it took off 12 payments. Let's look at around $2,300 does at 2.99. Well, look here. We'll go all the way to $2,400. If we prepay $2,400, it only takes off 7 months. What? At the lower interest rate, when we're trying to prepay this loan, at the lower interest rate, the same amount of money that eliminates 1 year worth of payments, at the higher interest rate, at the lower interest rate, 2.99, it only takes off 7 months. Oh my goodness. How many people knew that? All right. So folks, did you see that? The higher the principal payments, the harder it is to pay the loan off early. So the lower the interest rate, do you see why the bank is encouraging you to always refinance? Get that lower interest rate. Get the lower interest rate. They know it makes it harder for you to pay the loan off early. They know that. We don't. But now you do.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.